Hey there traders, I'm Lance Beggs from YourTradingCoach.com. Welcome back to our series on price bar reversals. In this video we're going to look at the open-close reversal pattern. Unlike the previous price bar reversal patterns we've looked at, which are found at either market top or bottom, the open-close reversal can occur at both. It exists at top reversals and it also exists at bottom reversals. We're going to look at both, but let's start with the market tops. We'll start with the setup. Being a top reversal pattern, price will obviously be trending upwards, and then we get the open-close reversal price bar, which we'll look at shortly. Please note that the actual positioning of the open and close tabs on the uptrend price bars is not important, so that's the open and close position on these price bars here. We're simply looking for price moving upwards. And if that rally has brought price up into an area of resistance at this point here, then it's an even better signal. Price moving upwards into an area of resistance with an open-close reversal pattern. Beautiful setup. Okay, I've now displayed an open-close reversal price bar and placed the definition on the left. You may wish to pause the video to write the definition down to help provide an opportunity to learn it. But let's go through it. The open-close reversal has a higher high. So the high on the price bar here is higher than the previous high down here. It also has a higher low. So the low point on the price bar here is higher than the previous low point here. And it has a higher close. So just like with the highs and lows, the close here is above the previous close here. Now the price bar also opens up near the high and it closes down near the low. That's it, simple. Now you might note that for the price to be opening near the high and closing near the low, but still closing higher than the previous close, it actually requires a bit of a gap up at the open. This therefore means that you're not as likely to get this type of reversal pattern in continuous markets or intraday markets, unless they're fairly illiquid or maybe there's some form of volatile news release. So this pattern is more for you longer term traders, for example stock traders on daily charts. Confirmation of the pattern will be price trading below the open close reversal price bar, down at this point here. As usual, adjust that as you see fit for your own requirements. If you're a little more conservative, you may require a close below the low. And a stop loss is ideally positioned where price should not go if the setup is to remain valid, which is just above the high at this point here. Let's look at the psychology or the sentiment of the pattern. As it states on the video here, the open-close reversal at market top displays bearish sentiment. Let's see how this works. It's a bit of a tricky one. Not everyone sees this reversal coming. You'll note that in many respects the uptrend seems to be continuing. The high is higher, the low is higher, and in fact the closing price is also higher than the previous close. Everything appears bullish so far. In fact, for a large part of the population watching stocks through just the closing price, they won't even see this potential reversal at all. The bearish sentiment comes from the intra-price bar action. While price appeared bullish at the open, the bears were able to strike a bit of a comeback with the price bar. From this point at the open, supply overcame demand from either an increase in selling or a drying up of the buyers, and the bears were able to overcome all buying and drive price down to close near the low, well below the open price. Astute traders will see this potential bearish change and may tighten stops up below the price bar if they're already long, so in this area here, or prepare to go short if that's their strategy. Confirmation through price trading below the price bar at this point will see a further increase in sell orders, confirming the change of sentiment and a potential end of the uptrend and commencement of either a downtrend or a sideways trend. We've discussed the reversal pattern as it applies at market tops. Now let's see how this applies for bottom reversals. But because YouTube only gives me 10 minutes, I'm going to have to rush this bit. The concept is the same though, just reversed. Being a bottom reversal pattern, the setup requires a downtrend leading down into the open-close reversal pattern. And if that drop has brought price down into an area of support at this level here, then it's even better. You'll see that the definition here is the same, just reversed. We have lower high, lower low, lower close, price opening near the low, and closing up near the high. Confirmation this time is with price trading above the high at this point here, adjust as necessary for your risk tolerance, and the stop loss is positioned below the low. And the psychology is the same as before, once again reversed though. In this case we have bullish sentiment. To the less astute trader the sentiment appears still bearish as the closing price has continued the downward move from the close here to the new close, which is actually lower. But intra-price bar, we see evidence of increased demand from the open, driving price up from the lows to close near the high. Price continuing higher on the next price bar will lead potentially to a further increase in buy orders and a possible ending of the downtrend and change to either a sideways or an uptrending market. Let's see some examples. Okay, we have here a daily chart of Halliburton. Price is in a downtrend. We actually have an open close reversal right here, which would have stopped out for a very small loss if you entered long. Hopefully you would have been concerned about the next price bar at this point here being a bearish rejection, almost a gravestone doji if you prefer candlestick terms, and you should have tightened the stop up underneath that price bar for a very small loss. But then we get an even better signal down here. Price gaps down to an area of previous support at the $31 area, marked by the black line here. Lower high, lower low, lower close, open near the low and close near the high. Perfect signal leading to a reversal of trend to upwards. And here we have BHP with an open close reversal right at its top back in May 08. So price trending up to this point here with an open close reversal pattern. You need to be careful in a stock that gaps as much as this, so I'd be making sure that I use these types of reversal patterns only in areas that provide other reason to expect a shift in the supply-demand balance. In this case, the stock is rising and gaps up right into the $50 round number, marked by the black resistance line here. A beautiful opportunity for an increase in supply. An open close reversal followed by an inside day and then a break below, and price hasn't got anywhere near that area since. In fact, it went on to drop by over 50%. Love it. Okay, so coming up in the next video, we're going to look at the closing price reversal. Having done the open close reversal, I promise you'll find the closing price reversal very simple, and then we'll follow that up with a number of other short-term price bar reversal patterns: the hook reversal, key reversal, island and pivot point reversals. I look forward to speaking with you again soon. I'm Lance Beggs from YourTradingCoach.com, wishing you as always many profitable open close reversal patterns.